Hey, this is Tony Watson with Robert Hall & Associates. Today I'm going to be discussing a little bit about alternative minimum tax and how it could be affecting your individual tax return. AMT, known as alternative minimum tax, known as AMT, is essentially like a flat tax for the wealthy. Once you reach a certain income threshold with your individual taxable income, your income could be subject to a flat rate called alternative minimum tax, where if your expenses and your income reach certain thresholds, the federal government will actually limit the amount of tax write-offs that you get to take on your individual tax return. Now, the reason why I wanted to discuss AMT today is just to let you know what deductions are not subject to alternative minimum tax. And unfortunately, the list is pretty short. Number one, property taxes. Number two would be your mortgage interest. Number three would be your charitable contributions. Your cell phone, your online charges, your legal and professional fees, your travel, your education expenses, anything as a W-2 wage earner that you might be coming out of pocket for as far as expenses are concerned will be subject to alternative minimum tax, and more likely than not, those expenses will not be a tax write-off for you. Now, lucky for us who live here in California and other states, the states normally don't have the same income thresholds for AMT calculations as the federal government. So you still want to take these write-offs on your individual tax return to increase state refunds or decrease state liabilities, but on the federal level, it might not make a difference to your refund or reduction in liability. So just understand that through proper year-end planning with your tax preparer, you could essentially avoid some of these limitations with alternative minimum tax. So if you ever have any questions, give Robert Hall & Associates a call. You can check us out online at www.roberthalltaxes.com or give us a call at 818-242-4888. Thanks.